minutes until 10 a.m. in London when I'm doing this market update. Let's take a look at the markets. It was a bit quiet when I looked at them about 2 hours ago. We'll see if things have picked up. We'll have some activity with the yen actually trading lower. So we're going to take a look at that and some of the other stuff as well. So you can see here, dollar yen down with about 28 pip or 26 basis points. Aussie dollar's up. Why is it up? Because you got some slightly better than expected unemployment figures. Jobs created were slightly more than expected, and the unemployment rate dropped to 5.1% versus the 5.2 projected. That caused the Aussie dollar to go up a bit, but it hasn't necessarily changed its trend. We can take a look at that as well today. And then you have, otherwise, most other markets are a bit quiet, and Bitcoin is down with about 2.5%, but Bitcoin being down with 2.5% is not really a big deal. So it's a bit quiet. There's other stuff as well, of course. I'm going to talk about that later, but it's all about the sort of the new coronavirus. And you got the Shanghai composite being down quite a bit today, down with about 2.74%. What's happened here is pretty much that they shut down the city of Wuhan. So they shut down the public transport system, and the government as well has said that no one should travel to the city or leave the city. And what they're trying to do is effectively just contain the spread of this new virus. So that's really what's happening now. Of course, as far as the report goes from that city, it's a little bit chaotic. People are getting a bit of panic, which is fully understandable. So they're trying to sort of hoard food, hoard fuel, while the government tries to calm people down. So that is affecting the markets here right now. It hasn't really translated too much into other stuff, but dollar yen, is down a little bit. It could potentially be explained by that. But so far we haven't seen too big risks on other places. I think what they've potentially done a little bit better this time around compared with the SARS situation is that when they had SARS, they actually, at least the Chinese government was said to sort of delay sort of sharing information about it, and sort of they were trying to keep things under wrap before they actually started to before they shared information with other people. So this time around, looks like it's not really like that. Most few cases, sort of, we heard about them just I think it was late December, and now it's been about a month, and yeah, so it seems to be managed better. So we'll see what happens. Hopefully everybody in that city and everybody else in that region can be safe, and we can not talk about this in a few months' time. Again, effect of markets has been primarily on the Chinese markets, if anything. All right, so euro is trading sideways, but today is ECB rate day, right? ECB rate meeting. The expectations is not really for any major changes. The ECB has effectively sort of told us that they're not going to make any changes. They put their QE, and then I don't really anticipate any major changes on the back of that. So I think it's going to be, but it doesn't mean that we can't have a breakout. And if you're not in the market, potentially a breakout could be better, and even better really if one could just delay things a little bit, because sometimes you have breakouts that don't really work out. Because right now today, if you're neutral, the market is just trading sideways between 110.65 and 111.18. So if we take out the high, things go upwards. Take out the low, things are probably going to go lower. The move lower as well is motivated by the head and shoulders. You get a head, left and right shoulder, and that neckline, and that's it. If we disregard ECB, if we disregard anything we just said, then we're still dealing with an uptrend. We're still creating higher and higher and higher and higher and higher lows, with the exception of this one. So this level here is really important. So if you see this just as a range, then we're at the bottom of the range, and we're very far away from the top section of the range. And that's why I've been bullish over the last few days, as you can see here. That's why this little spot is here. This is GBP versus the USD, and this is looking much better. Don't really know exactly what people are getting all excited about. On the 30th next month, I think, yeah, 30th, so exactly in 1 week, We have the Bank of England rate meeting, and I did report on that. Let's see if I can send that to you. Uh, and it looks today like they will cut interest rates. Um, not well, this I think it was a 60% likelihood that they're going to cut rates, and it's because of uh, economic growth. The GDP figures from the UK were negative in November, of the month of November. On a rolling basis, it's not as bad. But if you look at the PMIs, we're going to have a new set of PMIs next week, by the way. Unless service sector jumps, service sector PMI was at 50, unless it goes up to 51, 52. And then as well, you got the manufacturing and construction, where they are below 50. So there's contractions in those sectors. So unless we start to see things going upwards, the Bank of England is probably going to cut. The way things are looking right now, they're going to cut as well. And that tends to weaken the pound. But the market is having none of that. In fact, they're lifting things to the upside. And you know what? I don't mind, because we've been bullish from here. And if you did buy here, you should be up now with about 139 pip. That's not a bad profit. We also took out that triangle, and we might potentially go upwards. But because of the risks with that outcome next week, I'd let it go down a bit. I mean, it might go down easily to 30.50, 30.40. But if one is long, I would definitely like to go out here somewhere. Don't really think we're going to take out the high before the rate meeting. So again, if we go down maybe to 30.50, 30.40, I think that's where people are going to look to buy again. I don't know if you noticed, but stop loss was here. It's now been reduced here. We got a nice double bottom, so it makes perfect sense to put stops just there. Right, so this is dollar yen, right? So dollar yen has been slowly drifting lower overnight, right? Could be on the back of what's happening in the and in China. The Japanese yen tends to strengthen in times of crisis. No difference here. Now, U.S. stock markets have been quite bullish, and I do think they can continue to trade upwards. And this market should be trading much higher if that was if it was following in lockstep with stock markets, but it's not, and we just need to accept that if we trade below 109.36, then this is going to be a neutral market. We go down to the middle probably. And that will be 2 times we have false breakouts in this market, like in the very short period of time, if not more actually. But here, nice little rectangle, break to the downside on January 2nd, then goes all the way back into the range and does a breakout on the other side. Go down, and if we go back to the middle, we have 2 false breakouts in a very short period of time. If that happens, I would just literally ignore this pair for a few weeks. It's been very difficult, very choppy, and I'm sure we'll have a breakout at one point, but it doesn't look like today. If anything, it has sort of guided by some sort of an uptrend, but well, we can maybe possibly be buying dips if we wanted to, but going will break us in this pair right now does not seem like a good idea. Okay, so today it's a little special. I don't usually cover this market, but you got the Aussie dollar. So again, the unemployment rate improved slightly more than projected. They created slightly more jobs as well than created over there. However, so far the trend remains bearish. You got a head, left, and a right shoulder. So very similar pattern that you're seeing in the Euro USD. And that triggered on the 21st, and we're now back up to the sell spot. And as long as trade below 2069.11, I will be bearish. If you're just looking at this and you're considering, then you don't necessarily have to work with this level here. We'll probably work with something like that just to ensure that you don't get into too much trouble. What else? Gold. Gold is not really acting so much like a safe haven right now. But still, I guess, consolidating. It has some very good gains here, a few weeks ago when it went from pretty much 1457 to 1600. It needs to have a bit of a rest, and I guess this is what's happening here right now. The trend will remain bullish though, about 1535. I think we can go upwards. Crude oil prices, unfortunately, this one just did not work out. I was bullish from this whole spot here. We traded below the trend defining level, which was around this level. Now it's down. It's just above another major support level. But for now, the price is creating lower and lower high. So I will be I would take it easy here. Effectively trading size between 50, 45, and 63.60. So again, I wouldn't really do too much right now. German DAX as well is under a bit of pressure. So you might remember we had the breakout here. We said we can turn bullish from here if we wanted to. And we also had another breakout here. The market is obviously coming down to support. So I'm sure about 13,360. There's no point of doing anything. And then you have the S&P 500, which has moved down a little bit, but not enough to touch our buy spot. As for Bitcoin, it's sliding in deeper into the buy spot. And this is going to be a really interesting battle now here over the next few weeks, because you have this channel and you have the breakout here. So we took out that level, market is now down here, and it's really challenging that breakout. And we'll see if we stay above 7663, then we still dealing with that whole bullish uptrend. And we shouldn't really trade much lower. Might go a little bit lower, but we should not trade much lower than this level here. And that's why my trend final level is at 7889. And if we stay above it, we can potentially go upwards. But if we don't, we're gonna go all the way back down here, and then you would just be dealing with some sort of a choppy market condition. It will be literally, I think, probably a resumption of this. So we'll go down like that, and then we're pretty much at square one again. And then we'll see what happens if it wants to go up, or if we'll just create like another break like that. So you need to be careful, but this is sort of the line in the sand, this little spot here. If it goes down and then up, should be like that. There is another one here. Let me see here. It's called total. There's something called total market capitalization. There we go. Total crypto view market. This is total. This is the total value of the crypto market, which is right now worth $227 billion. This is, of course, all the listed markets, and it comes from CryptoCap, the data. If you look at it from a bigger picture perspective, we're still within that massive triangle, which does us that maybe it's a little bit too excited to get, it's a little bit too early to get excited. At the same time, you can see how we were within this channel and we had that breakout here. So we had the breakout here, and this looks very much like Bitcoin, right? So we're challenging that breakout, and we may go down a bit more, but as long as we're above here, we can go up. It has a target, which is about 39,000 or 39%. As a target, suggesting that market capitalization as a total should be 294 billion, as long as straight above this level here, which is about 197. Okay, that's the link, by the way, for the Bank of England. I'll send that to you. We don't have any questions today. It looks like I was away for 1 week in Hong Kong and then everybody got shy. You're most welcome to write to here or just say hello. That's perfectly fine. Now what we're going to do now, though, we're going to wrap things up. If you do have any questions for me during the day, you can always reach out to me via AlexFX00. You can also reach out to me via info@investingq.com. Okay, we're going to wrap things up. Guys, thanks so much for joining me. And yeah, final thing here, actually. This one. You see this little box here? If you sign up here, you'll actually get our morning brief every day to your mailbox. It's really good. It's this one here, written by Angeline. And it literally gives you an overview of what's happening in the markets. So the headlines, and then something about New Zealand dollar in this case. It really depends. Sometimes if there's a lot of stuff, she will put more. For example, Aussie employment report, and so totally free to sign up. You can do it here. The only thing you will need to do it from a desktop. You don't actually see this little section on mobile. Okay, guys, have a great day and happy trading. And I'll see you guys tomorrow at 9:30 a.m. London time. Thank you and bye bye. Cheers.